We're going to look into NIO July deliveries and an interesting fact about NIO's financials. Let's get started. So NIO came out with this report this morning, not even a few hours ago, that NIO delivered about 7,931 vehicles in the month of July 2021, increasing by about 125% year over year, which sounds good. Wonderful. If you look into the month of June, they had about 8,083 vehicles, so a little bit less than what they have been doing. But one break in the trend is over the past few months, they have been increasing their vehicle deliveries over a month-by-month basis. This seems like a small turnaround with what they are usually capable of producing. But let's look into this interesting fact. This is an article called An Analysis of 100 Baggers, analysis by Tony. In Chris Meyer's 100 Baggers book, he recommended this particular article. So he's basically here going over a couple of companies and understanding the overlying pattern in all these companies who ended up as 100 baggers or 100x your money. So there's one particular aspect which is very interesting, and it's talking about PE expansion. So wherever their company is growing, there is an underlying PE expansion that happens. So here's what he gives a very easy example to understand. He gives us an assumption that there are two stocks called Flat and ACC. Both of them had an earning per share in the year of 2000 as $4, which means $1 in each quarter of 2000. So let's say both these companies, they started off with earning $1 in each quarter of 2000. Now in 2001, this is where it becomes interesting. Flat in 2001 earns $1.25, which is a 25% increase from the previous quarter. Then in the month of, or in the quarter 2, it again makes 1.25. Again in quarter 3, it makes 1.25, and quarter 4, it again makes 1.25. So an overall 25% increase in each of these quarters. So if you look into the total year of 2001, Flat in total made about 25% growth, which is now $5 per share. So if you add all the $1.25 for the 4 quarters, you end up with $5 per share with a 25% growth year over year, which is very good. But this is where it becomes interesting. Now, ACC, which is the other assumption stock, which both started off with the same pace, in 2001, the first quarter, it made 1.110. So it made 10% increase in the quarter 1 versus Flat, which made 25% increase. So ACC made only 10%. And then quarter 2, it made 20%. Quarter 3, it made 30%. So quarter 4, 40%. You can see there is a gradual increase in every quarter. So every quarter it's increasing by 10%. So if you look at 10% here, 20% here, 30% here, and then 40% here. So overall for the year of 2001, the total it made was $5 per share, same as Flat, and also with a 25% growth year over year. But the interesting fact is it was growing on a quarter to quarter basis. And these are the ingredients for a very good 100 bagger. So these are some of the patterns that it has gone through this particular report. It's a 15-page report, not too big. I'll share the link in the description for you to read over it. A very nice piece to read. Now, if you look into NIO's financials, this is quarterly financials. NIO is, of course, not right now. It's not in the earnings phase. But if you look into the revenue section of quarter, so every quarter it is increasing its revenues on a regular basis. That is a very good recipe for us. Now, we don't know that whether it will follow the same trend which is being discussed in this 100 baggers. Again, this is a report which was 2 decades old back in 2000. So things have changed, things have worked out, mentality, the whole mindset, the whole market has changed drastically since then. But still, something interesting to look into. Yeah, just wanted to share this with you. With that, take care, stay safe, bye-bye.